Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective for the end of days analysis of Monday, the 22nd December 2014. Okay, so not long before the week's over, and obviously Christmas settles in, so Merry Christmas and an Happy New Year to all, if I don't get to do another video. Given the fact that it's a short week and there's nothing much really to talk about other than the recurring theme being a light volume flow up. Okay, that's basically what seems to be reoccurring right now. Okay, and that seems to be the reason why the markets have more than likely rallied quite substantially, and also given the fact that the manipulation by central banks to keep stock markets higher going into Christmas, so that everybody keeps spending and everybody remains joyful and happy and so on and so forth. Okay, and that's hence the reason why we call it a Santa rally. The markets still, the headwinds remain. We know Greece, uncertainty remains there with the leftist party Syriza coming into potential power, given the fact that they've got 3 attempts to obviously vote Mr. Samaras in, or the Samaras party in. Okay, so at the moment the first round has failed, second round certainly seems to be failing, given the fact that there's talk about potential rigging or potential bribery, etc. Either way, it doesn't bode well. So Greece is certainly a headwind. Russia and Ukraine certainly seem to be a headwind, especially with regards to the increased rhetoric from Putin and obviously Obama as well. That certainly remains a headwind. ISIS, as we all know, that certainly remains a headwind. Okay, so especially with regards to the emerging market chaos following the ruble collapse, and I think there was a bank that was bailed out today, a Russian bank as well. So there's a lot of headwinds and a lot of uncertainties, and also obviously with regards to weaker economic data globally as well, and that certainly remains a concern. There's also talk of a watered down version of QE via the ECB, with the smaller nations or periphery states bearing the burden, or the majority of the burden. So there's certainly a lot of headwinds, okay, with regards to the markets. So that's something that we'll have to discuss as well, and also with regards to post Yellen. At the moment, I think the market still isn't really decided or really convinced as to whether the market, if she was hawkish or she was dovish. So again, that's debatable as well. So we'll see exactly what happens, given the fact that well, more than likely the new year now. Given obviously we need volume to increase, and we need conviction with regards to these markets. So that's something again from a day trading perspective, from a long-term perspective. There's too many variables for me to forecast in terms of further out. So at present, I think I'll leave it at that. Okay. So economic data today, realistically, I mean, we had the weak inflation number last week, and obviously sterling certainly seems to be under pressure, and that's keeping the FTSE afloat for now. That's for now, though. Okay. Now that certainly seems to be the recurring theme, especially with regards to FTSE 250 rally. Okay, so at present, so where are we? Okay, so economic data, European imports, basically inflation was worse than expected in Germany today. So again, that does strengthen the argument for QE or the QE supporters. Okay, nothing really out of the UK in terms of economic data other than the Eurozone. Consumer confidence was slightly better than expected. USD home sales were worse than expected. Which obviously isn't good for the US economy, and that's basically it. Okay, so we had the Asian markets higher overnight. Shanghai, Hang Seng, and Nikkei were all higher, so that therefore adding light volume, and given the fact that the USD JPY has broken the 120 barrier, then everything remained afloat, because you have the QE from Mr. Abe, and there's also talk about low oil prices potentially having the deflationary impact in Japan as well, which means that he will have to obviously keep the money printing going, so therefore it's the stimulatory effect there, and hence the reason why USD JPY breaks the 120 barrier, especially given the fact that Miss Yellen was hawkish from what I understood. Okay, okay, so where are we? Okay, so technically speaking, I mean, that's what we can rely on for now. When we don't have economic data, we can fall back on TA, and like I said, from my perspective at the moment, the headwinds and the geopolitics and the socio-economics certainly indicate bearish momentum, but given the fact that there's light volume, the markets generally tend to float higher. Okay, and that's basically the nature of the beast at present. Okay, so where are we? We put in a topping tail today, Monday, which is quite important, and that's going into a Tuesday, which is quite heavy on economic data. Okay, so that's going to be very, very interesting because we have UK GDP obviously out on Tuesday, the 23rd of December, so that's going to be very interesting. And a lot of UK data, and we have a lot of US data as well. So given the fact that we're putting in a topping tail at fib 75% on horizontal resistance, that doesn't exactly bode well and isn't exactly a bullish sign. That generally tends to mean that investors are certainly aware of what's going to occur the following day on a Tuesday, and obviously are bailing out or getting out, heading to the exits in advance. So that's intelligent money. Okay, a topping tail plus a fib 75% resistance failure and previous horizontal resistance all indicate a reversal. 1, 2, 3, 4. We've had a 5-bar move, so therefore this 6-bar will certainly be a reversal. Looking for downward momentum. Okay, that's basically what I'll be searching for come Tuesday. Okay, so my bias certainly remains bearish on the FTSE 100 daily chart and in FTSE 100 in general. Okay, so let's have a look at the FTSE 250 now. FTSE 250, like I described before, it's all about the actual sterling. Okay, so obviously these companies are all heavily reliant upon the export sector, and obviously exports are reliant upon the value of the sterling. Value of sterling is dropping, and that will help the FTSE 250 companies. So we're at double top resistance now. So again, that's certainly further signs of the FTSE 100 coming into resistance. If I confirm that with the FTSE AIM, we've had a thrust higher from the double bottom, and we are looking for exhaustion now, potential move lower. Okay, FTSE 350 is again topping tail, and again, if I use my fib, take the pivot high, connect it to the pivot low, again fib, so previous support equals resistance, horizontal resistance, and basically we are at resistance. Okay, so fib 75%, 200 MA just above, and obviously the market's a fail where previous support equals resistance. Okay, so that basically confirms that. Okay, now we can look at the FTSE volatility index. Again, that's going to be very interesting. Now, as you can see, 60-minute chart is putting in a potential base case scenario here. Okay, so we are looking for a potential reversal now. So if the volatility index is showing signs of obviously of a reversal, because obviously we've got a double bottom there, we've held a 200 MA, and now we're potentially looking for a move higher. So if the volatility index is on the way higher, that obviously indicates that the FTSE 100 is on its way lower, and as you can see, 200 MA is held in the daily chart. Previous resistance previous resistance equals support, and we are looking for a potential thrust higher on the volatility index, which means that we're looking for a move lower on the FTSE 100. Okay, that's basically how we're interpreting that. So let's have a look at the smaller time frames now and see if we can gain a better insight as to which way the FTSE 100 will go. Okay, so we have a bullish channel here. Okay, so basically what we're looking for is a bullish channel that's on the verge of a breakdown. Okay, so obviously you've got a bearish continuation pattern there. We've been unable to fill the gap above because there's no real catalyst to actually fill the gap. Now, what's interesting is that the Shanghai is, it's currently almost approaching 4:30 in the morning. Okay, on a Tuesday, 23rd of December, and the Shanghai is currently down 22 points. Okay, and that's mainly due to the fact that there's some news out with regards to the Shanghai. Basically, what's happened is that the CSRC is probing companies and individuals on stock manipulation. Interesting. Okay, so potential stock market manipulation, given the fact that we've had quite thrust higher on the Shanghai, and obviously that doesn't bode well for the index. Okay, early start today, hence the yawning. Okay, so as always, I always generally tend to wake up around 4:30, 5 o'clock, start to analyse the markets and see what happens in Asia overnight, and study and obviously prepare for the trading day, which usually starts from 6 o'clock, and I attempt to, as a day trader, I always try to make 50 to 100 points by 9, 10, 11 a.m, and then obviously I look to finish for the day. Okay, right. Okay, so basically Nikkei at the moment is only up by 13, so again that's weakness. Okay, MySex, as we know, was negative today, so that's not a good sign. Okay, especially with regards to the pressure on the ruble. Okay, and so the story of the day really will be 22 points negative on the Shanghai. That confirms resistance for me. For the FTSE, or confirms a weakness in the FTSE. And as you can see in the 60-minute chart, it's on this channel is on the verge of a breakout. We currently have a bear flag formation on the 60-minute chart. So we look at our 10-minute chart, and as you can see, we've broken out this bullish channel. The unfilled gap needs to close at 6550, so watch out for that gap to be closed. We've put in a double top resistance intraday here. We've put in a lower high. This is a lower low, and again at lower high we'll be putting here on the 6580 level, and obviously moving lower. Now the current futures price is around 6610, 6620, so that certainly will be a good opportunity for me to short, because that's horizontal resistance, as you can see here. Just draw that in for you. Okay, so we've got a resistance level there, and then we've got a resistance level there. So again, 6610, 6620, good resistance level, and that obviously will give me the ability for the markets to close the gap below at 6550. That's basically what I'll be looking for come into Tuesday's trading. Okay folks, so that certainly indicates weakness for me. Now I can look at my sectors, so for example I can show you further insight as to how I trade and what I observe. The construction index, as you can see, double top has been put in, and a 10-minute chart, you can also zoom in on the 60-minute chart, I'll give you a better insight. The retail sector, again, double top resistance, horizontal resistance, again weakness, especially with regards to report out Sainsbury's and about the supermarkets going forward, so that doesn't bode well. And as you can see, the oil price has certainly held that resistance level and obviously moved lower, so the oil price itself is weak. Therefore, especially given regards to the news regarding Saudi, not interested in reducing output regardless of oil going down to $20. Oil and gas, as you can see, has held that resistance level there. Now certainly bodes bearish and doesn't exactly look good with regards to the FTSE, so again indicating further weakness on the FTSE 100. The mining sector again is weak, as you can see there, lower high was put in today, and Vodafone bearish engulfing candle at a double top resistance around the 227, 228, again doesn't bode well. So overall everything does not look well at present, and it looks very weak, okay, which I've explained on from a technical point of view. And like I said, from a fundamental point of view, we have a lot of economic data, therefore that should bring in the volume. Given the fact that the recent move higher was based on light volume, that itself is a fundamental reason for shorting the market. But if you add in the fact that you've got the geopolitical uncertainty from Russia, Ukraine certainly dominating and will be dominating, and the uncertainty or socio-economic concerns regarding emerging markets due to Russia. Okay folks, so risk